Joining us now for a closer look at developments overseas is Ashraf Lady. He's Chief Executive Officer of Intermarket Strategy, and he joins us from London. Ashraf, it's good to see you again. Thanks very much for being here. You have been a skeptic on the subject of a Fed rate hike for some time. You continue to say that you do not expect a rate hike to be announced in September. Why so?
Yes, thanks for having me. Since the oil price fell 30% from last summer until December, the Fed did not take notice of it. And then afterward, it wasn't until the 30% decline where the Federal Reserve started to mention the impact of falling energy on inflation as a transitory impact. And it continued to do so. Oil prices had a reprieve or a rebound in spring, then came down by 25% and continued to do so. The interesting thing here, while everybody is trying to jump on the idea of a September or a December rate hike, interestingly, in the policy statement of the July meeting, the Fed dropped its reference to inflation or to energy to have become stable. It no longer thinks that energy prices have stabilized. And so with that, it means that they are paying more attention to it. Now, we know that they look at wage growth. We know that today's CPI may have the potential of showing an upside surprise. But I think we need to look at next month's release of the CPI for this month, for August, where there's going to be further implications by the continued decline in oil onto that. And of course, probably there is no need to mention the China element right now, which I think the yuan is going to have to go down by at least 4 to 5%, to which it's going to lead to further declines in oil prices, or at least no recovery in oil prices. And it's very hard to see the Fed having to raise rates, even if it's a baby step.
Ashraf, how significant do you think what is going on in China is from a global market perspective at this point? I mean, we were just talking about the yuan devaluation, about volatility in the stock market. Does that tell you very much about the underlying Chinese economy, and is it a source of optimism or concern?
Well, China used to stick to reducing the RRR and the interest rates and to increase money lending to the banks, to the government giving liquidity. So these three items, they stuck with these over the last year and a half, 2 years. Then decided to do for a fourth item or a fourth arrow, PBOC's arrow, which is on the 10th anniversary of the revaluation, they decided to actually depreciate the currency. Even though the yuan has gone up for the last 4 days, up, not down, which explains the declines in the Shanghai Composite, we think that it's a matter of time before the yuan goes down by 5 to 7%. I would say probably 4 to 5%. To answer your question, what are the implications on the rest of the world? There's no need to be alarmist, but we do think that they're not going to strengthen the commodities. The world's biggest buyer of commodities, when they weaken and they're going to push all the stops, the prices of the thing they buy, they're not going to go up and they're not going to go down. And I know you talked about having to take a view of the long term and not a day trading view, but let's get real here. Oil prices have gone down more than 30 to 50% and have dragged down the rest of the commodity, the complex with them. And that will impact stocks because the capex players, they come more from energy than from tech or from healthcare. So that will definitely lead to a much anticipated correction in the stock market. And that will really, and any rate hike, if they do raise rate, it will be called a policy error.
I'm interested in your view on the Canadian dollar in this weak oil price environment. One of your colleagues at Intermarket Strategy, Adam Button, wrote an interesting piece, I believe just yesterday, in which he suggested the commodity currencies, plural, the currencies around the world that are heavily levered to commodities, show signs of forming a base. The Canadian dollar is now at about 76.5 cents US. Is this the base that you and your colleague may see?
You know what, Paul? Had you asked me the same question when the Canadian dollar showed a base 2 months ago, when oil prices was showing a base, everybody was jumping about a base, I think there's probably going to be further declines in the Canadian dollar, not necessarily against the US dollar, probably against the euro. Some people who are watching me this morning, they said, what? The guest said the euro? Why? The euro was used as a carry trade instrument. People used to borrow euro and put money in the higher yielding emerging market. Now this big unwinding, the FT had a piece, the biggest outflow in emerging markets in the last 13 months, which is more than double that of the last crisis. So we think there's going to be more declines in the loonie versus the euro and versus the Aussie.
Ashraf, good to speak to you. Thank you very much.
Thank you.
Ashraf Lady of Intermarket Strategy joining us from London.